Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 25, 2022. Let's talk about what stocks to buy during market-wide sell-off. We'll start with the market update. It's all about inflation. Let's talk about inflation and see what's going on there and look at the market correlation to see what happened in the past and learn from it. And let's look at what worked in 2018, which was a very high inflation environment, and also look at large cap stock performance and see what we can buy. So with that, let's get a quick market update from Thinkorswim. So let's jump into Thinkorswim here. As you can see here, we got a futures market. Look, S&P 500 is down here below 200-day moving average. And as you can see here, it's opening up to be a lower day today. So even after 7 days sell-off, today is going to be one more day in the sell-off. And typically, as many of you might be knowing, these sell-offs will last normally around 11 to 12 days. Afterwards, we'll normally get a bounce back. That's the historical pattern. I say, we might have 2 or 3 more days of downturn. And then probably after the FOMC meeting on Thursday, we'll see a relief rally and it might go a little higher. But if Fed talks about interest rate hike aggressively, then it might come a little lower. So same story, Nasdaq is also down here below 200-day moving average, and there is no relief in other indices. Both Dow Jones Industrial Average as well as Russell, both are down as you can see here. And let's see what's going on in the bond market. So as you see here, we got bond market coming up here, and bond market is also pointing to a little bit rebound as you can see here, but it's opening to be a little bit lower on the bond market side. And interest rates, as you can see here, this is a big one here. Interest rates are going higher. That's causing issue to stock market, and stock market is waiting for Fed decision on 25th. We'll see how it goes. And see here we got crude oil. Crude oil is jumping higher. It's opening up to be a little bit lower today, but generally it's higher. And we got gold here. Gold is safe haven, as many of you know. It's also wondering what to do here. It had a good run, as you can see here. So with that, what we'll do is we'll look at some history from the past and market correlation and what to buy during the high inflation environment. So with that, let's jump in here and look at what to do. As you can see here, this is a US inflation rate. Keep watching here. We got 2021 on the top here, which is last year. Look at the inflation. So overall inflation in 2021, constantly went higher. In January, it was 1.4, and look, in April 4.2, and July 5.4, October 6.2, December 7. This is why Fed is worried. All the rates are going up. Supply chain, logistics, even the labor cost, everything is going up. That's why Fed has to take action. It's not about Fed being tough to curb the inflation. Fed has to take action. And as you see here, keep watching here. This is the average rate. As you can see here, average inflation rate is the highest ever right now. That's why Fed has to take some action. Look, we had a little bit higher rate back in 2006 time frame, and look at 2018 here. We got 2018 somewhere right here. So 2018 was a high inflation environment, and Fed has to increase multiple rate hike. But even if you look at 2018, right now we are almost twice as much inflation as 2018. So 2018 was a tough year. Fed has to raise the rates, but now we are even tougher with the inflation. So that's why Fed has a very difficult job. So they got to raise the rates, and they have to do it in such a way it should not spook the market, because we have a pandemic to deal with. So we'll see how it goes. We'll wait for FOMC meeting and we'll have an update after that. So as you see here, let's go into a little more detail. From a FOMC meeting perspective, as you see here, this is the 2022 calendar. Look, we got January 25, 26. After 26, which is tomorrow, we'll have a Fed meetings coming up. We'll see what the Fed's tone here. It all depends on Fed's tone. If they have aggressive tone, market will fall off. But if the tone is a little bit desirable, then market can have a relief rally. We'll keep a close watch. But Fed has a very tough job. I think they have to have some little bit harsher tone. But if they say words like data dependent, market will like it, and we can have a relief rally. We'll keep an update on this one here. And as you look through here from the past, look, in the 2018 time frame, we had multiple rate hikes. We had one rate hike announcement and rate hike, in March. Market fell off the chair, came down big time. This was a 25 basis point raise, and then you got four more. So market really did not like in December. December we had a market wide huge sell off. So we got to be careful. If Fed does something similar, we can have a down year this year. We'll see how it goes. And as you can see here, we got Federal Reserve. They will meet, and they might. They're meeting on 25, 26, and we'll see how it goes. They might talk about monetary policy, tightening, and tapering bond buying. So that'll all have impact on stock market. And as you can see here, we can expect maybe up to four hikes this year. That's why you got to be careful. Expect every time Fed talks about another rate hike, expect turbulence in the market. So get used to it. So I think one of the best strategies to buy the dip. And if you're a little bit little bit experienced trader, you could also buy some put options when the market rallies. So that way you are holding some put options that you bought, and if the market comes down, you can make some money that way. So if you're not, very savvy with the options, I say, buy the dips whenever there's a huge correction like yesterday. Buy some great stocks. Think about, great stocks like Apple, Microsoft, Google, all these work, all these big cap names. We'll talk about some of those, even Eli Lilly for that matter, and buy them at the dip. That will work well. You have a longer term horizon. Don't worry too much about. And as you see here, Fed is, they're in a very tough spot here. We got a very high inflation environment, and they got to take action. That's why market is wondering how much rate hike will happen. That's why they are going down drastically. Next, let's look at market correlation. As you can see here, I got here, market inflation rates all the way here back to 2000 here. Look, right now we're in a higher inflation environment. We got, as you see here, we got inflation year over year. It's perking up, as you can see here, 2.30 right now. So let's keep a close watch here and go from there and see what's going on right now with all the inflation fears. We just started the year 2022. January is not over yet. Look here what's going on. We got S&P 500 already down for the year, 7.4%, and Nasdaq is in a correction territory, 11.2%, and we got Dow Jones Industrial Average down 5%, and we got other indices, as you can see here, all down big time. So that's why we got to be careful here. We are down so much already for the year, so we have to watch and see what's going on here. Look at technology. Technology is already down big time here, down 10%. Semiconductor is down big. Consumer discretionary, XLY, is also down big time. I mean, consumer defensive is down big time here. So that's why we got to be careful here, and buy some great ones as it falls off. Look here, both, healthcare is down, which not so much. XLV is not down so much, but IBB, which is biotechnology, biotech is down big, as you can see here. That's why you got to be careful. Buy some great stocks. You might ask, hey, what went higher? Look, we got gold here. Gold went higher so far in January. It's a safe haven, as you know. Even up here, you could buy some great gold stocks. And energy went higher. That's also a good one. But right now, you got to be careful with the energy. Energy is very volatile. It's always good to buy energy when it's down. And as you can see here, financials is working so far. You could buy some great financials and also some utilities. they have fared well so far. So with that, even healthcare is not too bad. You could buy some great healthcare names at a bargain price and take it from there. And look, we got 2018 here. You can see here this was a high inflation environment. As you know, Fed increased multiple times. Look, S&P 500 rolled over by 6.2% in 2018. And look at small cap. Small cap down big time in 2018. Nasdaq fared pretty well in 2018. That's why 2018 was a little bit different scenario, because these high growth names did pretty okay in 2018 despite of high inflation. And technology also did not give up too much in 2018, as you can see here. And as you see here, healthcare did well. I think healthcare is a good area. You could buy some great healthcare names. Right here, healthcare is here. Healthcare is a good area. You could buy some great healthcare names. Think about Eli Lilly, Abbott Labs, and some of those great names we'll talk about, and go from there. And look, as you look through here, XLU utilities did well in 2018. I think you could buy some great utilities on this sell-off and go from there. Look, gold did pretty okay, not too bad in 2018, did not go down much. You could look at gold also. And then you got here all the way down here, dot-com bubble. Look, huge dot-com bubble here. What worked during dot-com bubble? As you can see here, you got industrials went higher during dot-com bubble. Financial did okay. Utility did very well. And we got consumer staples did well here. Energy also did well. So in a nutshell, as you can see here, XLV, it's a good one. You could buy them. Mostly green, as you can see here. Yeah, there are some corrections, but mostly did well. And as you can see, utility is also pretty good. You could buy it as a good bet here. And as you look through here, we got gold somewhere in between here, GLD. Um, Gold is also pretty okay right here. Gold is also pretty okay. It's a hedge play. You can't have a nice appreciation in the gold long term, but it's a good hedge play. When the market is dropping big time, you could buy some gold and go from there. So with that, let's jump in here and look at the monthly market correlation. So as you see here, we got monthly correlation here. Look, this is 2020 to present, so that way you know what's going on off late. As you see here, we are in January right now. We just started January. Look what's going on. We are already down big time. Market is down. The bigger indices like S&P 500, QQQ, DIA, all big indices are down. S&P 500 is down 7.4%. QQQ is down 11%. Correction territory. That's why you got to be careful here. As you see here, look, this is not something new. This has been happening for a while now. Keep watching here. We got January, huge big turn in major indices. And then look, September last year, we had a big correction again. SPY down, and then it came back up again next month. And keep watching here. We got March here. This is a COVID-19. Look at the downturn here in the big market here. During COVID, we had big downturn, 19% down in SPY and 7% down in QQQ. And again, two consecutive months of correction here. You got to be careful. Something like this might be in the cards. Don't buy all the stocks at one time. This sell-off, it's continued for 7 days. It might continue maybe say 12 days or so before it tapers off. That's why you got to buy slowly into the downturn here. And look, when the market drops off big time here like this, see what's working, right? So look, XLE energy worked this time around. Gold is a good hedge. It's doing pretty okay here, not too bad. And look, we got XLF financials are doing pretty okay right now. And look at XLU and XLI, they fared pretty okay, not too bad. So you could look at some of those names, buy them slowly. They have not dropped so much. And as you see here, generally, as you see here, looks like off late energy has been doing very well. Look, energy is doing pretty well after the huge big sell-off back during the COVID days. And gold is always a safe haven. It's good to have some gold allocation in your portfolio. And generally, as you can see here, as of now, bigger indices are selling off, as you can see here, big time. And look, even XLY, real estate is also selling off. Home builders are selling off, as you can see here. Technology and semiconductors selling off big time, as you can see here. So now what we'll do is we'll look at what happened during 2018 time frame. So as we see here, this is a 2018 chart. Look, we got 2018 here. So we got 2018 from January all the way to 12/31/2019. So as you see here in 2018, somewhere around March time frame, this is when Fed started making some comments around the interest rate hike. Look, market took a very big dip here, and one more dip. They talk about interest rate again, big dip here, and look at this huge dip, back in December 2018. So get used to something like this. Fed's job is to curb the inflation rate and make sure inflation does not become too high. So get used to this. Look here, this is maybe 7-8 days of correction, which is something similar to what we have. This is even more prolonged. This is about maybe 15-20 day correction. So that's why expect these type of sell-offs to continue. Get used to market sell-off, maybe say up to say 10 to 12 days, then it will taper off. Look, nice correction, then it went higher, nice correction again. Now from now onwards, it's no longer just 1 day dip and you buy and off you go. Get used to prolonged dips, for example maybe 7 to 10, 10 to 12 day type dip here, and that's when we have to buy slowly and go from there. So with that, let's jump in here and look at what happened during 2018 time frame. So look, we got 2018 to 2019 here, which is a high inflation environment, as many of you know here. Let's see what worked in this environment. Look, we got a couple down months here. See, we got December 19 was a it's actually December 19 here. Let's start from the bottom here. Look, Fed started announcing they will do rate hikes, back in February March time frame. Look, we got 3 consecutive months of market down here. S&P down for 3 consecutive months. So right now we are talking about just January. So expect these type of turbulence here. It can continue the sell-off some more. Get used to it. That's what happened in 2018. That might continue. And look here, what happened in October to December here. We got huge sell-off, 10% off in S&P 500, and on top of that, we got 11% off in December. So something like this also might happen. Get used to that also. That's why we got to buy some great stocks here and go from there. Look, we got May here again, 7% decline. So I think some things like this might happen because of the inflation. If Fed ratchets up the rates, expect these type of actions here, which is very normal for the market to have. As you look through, when the market dropped big time, keep watching here. We got December to October time frame. Look what's working here, right? We got huge drop in S&P 500 and QQQ. But as you look through here, bonds did pretty okay. XLV, I think it did pretty okay, not too bad. I like XLV for longer term here. It will always do well. And look, we got consumer staples. It kind of rebounded pretty nicely afterwards. And we got a few other areas which rebounded nicely. But as you look through here, when the big drop happens, keep watching this segment here. When the big drop happens, look, we got TLT, which is bond, which did okay here. And we got IWM small cap. For some reason, it inched higher after dropping big time. And we got gold here, safe haven. Gold did pretty okay. But longer term, as usual, the normal wisdom will prevail. Indices like SPY, QQQ, XLV, and even XLY, XLK, which is technology, they will all do well, even semiconductors. But during the downturn, the high growth, high reward names, they will take a big beating. But that's the best time to buy some of those. I'd been buying some QQQ off late, and also some SMH and XLK into this downturn. I think you could, if you have some cash, you could do something similar. They will do well longer run. It's painful to watch indices drop big time, but it'll always do well. So with that, let's jump in here. Look at what worked during the 2018 high inflation environment. As you see here, keep watching here. We got 2018 here. And what I've done here in this chart is I looked at only the big cap names. All the stocks are 100 billion plus market cap, as you can see here. High market cap names. That's the list I took for this illustration. As you can see here, we got top name here, Eli Lilly, which is one of my favorite. Look, Eli Lilly, so far this year, they're down in 1 month, they're down 12%. And its stock is sold off, as you can see here, RSI 33. Look what happened in 2018, high inflation environment. Eli Lilly went up by 37%. And they got tip-top financial shape here, grade B from Morningstar right now, and grade A for profitability. And they got a little bit lower price to sales ratio, and price to earnings is also not too bad. Valuation is under control. So I would buy stock like Eli Lilly into this weakness here. You're getting it 12% sale here just in January. I would buy some Eli Lilly. And look, we got Merck here. Merck off late is going higher, as you can see here. You could buy some Merck. Look, Merck had done great in 2018 high inflation environment. Look, 36% performance. You could look at buying some Merck also here. And then you got few more names. These are a little bit up there, high growth names, as you can see here. Use your judgment. All these are high growth names. They've been dropping big time. Look, it's just in 1 month, all these names have dropped so much. But if you look at what happened in 2018, these maybe a little bit early stage companies back then, they all have done nicely. The key is to look at price to sales ratio. For now, I say avoid high multiple names like ServiceNow. You could buy slowly into the dips, but don't buy too much. And look at Shopify. These type of names here with the high price to sales ratio, you can avoid them. But you could, if I were you, I would buy Netflix slowly. After this huge big drop off here, they will do well. Salesforce.com is also a good one here, even though price to earnings is high here. Price to sales wise, it's okay. You could slowly buy this one into the weakness here. Mark Benioff always does very well in the longer run. And I like even names like Adobe and Amazon. You could buy slowly into the weakness. All have done very well in 2018, as you can see here. Right now in 2019 and 2022 so far, they are big time dropping off. So if you want to be a little more cautious, go after the low multiple names like Amazon is a good one. They will do well. And look at Abbott Labs, one of my favorite. You could look at that one too. Pfizer is a good low multiple stock here. Nike, same story, low multiple. Anthem is a good one too. Thermo Fisher, very steady Eddie. And PayPal is sold off completely. And UNH is a great one to buy also. So these stocks will work. Look, they've all done pretty okay in 2018, high inflation environment. And now let's look at a little bit smaller cap here. Next chart that we'll look at is, let's see here. Next chart that we'll look at is, a little bit lower cap stocks here. Let's see how they fared. All right, so let's look at a little bit lower cap stocks. As you see here, these market cap is between 10 to 100 billion dollars here. And as you can see here, they also have done pretty well in 2018 high inflation environment. And the key is to watch the current PS ratio or price to sales ratio. If it is higher, like here we've got Twilio and MongoDB, don't go after them right now. Right now it's too hot. Instead, go for a little bit lower price to sales ratio here and go after those. For example, we got here Carvana it's got a different set of issues at this time. I would say maybe buy slowly or even avoid Carvana for now. But look at let's see here. KL is a gold stock. You could look at stocks like this one here. It's doing pretty well, as you can see here, just down 2.2%. You can look at that one here. Sienna is a technology stock right now, low PS ratio here. It also worked very well. You could look at that and see it's been down so far 14% in January alone. And then you got your Square is completely sold off, as you know here. Low price to sales multiple here. You could look at that one too. I love Zebra. That's also a great one here. You could look at that one too here. So those are some good ones you could see in this range here from 10 to $100 billion market cap range here. So with that, let's look at a few more things here and go from there. So let's look at the current performance in large cap stocks here. So that way you know what stocks you can buy during the sell-off. As you see here, this is the current performance in the large cap names. Look at the top of the list, we got Apple, which is a huge market cap, as you all know here. Market cap is $2.6 trillion. And look, it's price to sales ratio is 8 here, and price to earnings is also lower, 28.8. Has rock solid financials here, B, and profit is grade A from Morningstar. You can take advantage of sell off in names like like Apple here, which is a very low price to sales ratio. Even Microsoft is good, a little bit higher price to sales ratio, but it's doing great. Gets a B grade in financials and B grade in growth and A grade in profitability. And keep watching these names; they will serve you well. And look, even Google, Amazon, all I got low price to sales ratio. Tesla is a wild card here. I typically buy Tesla whenever there's a huge sell-off. Buy some Tesla. They got a little bit higher price to sales ratio. Valuation is a little high. Price to earning perspective is super high. That's why good to buy Tesla when it's completely out and down and go from there. And then you got Meta, as you can see here, Facebook. Price to sales ratio is low here, and rock solid financials here, and nice growth. You could buy some Meta. I know there's some fear about Microsoft buying Activision Blizzard, but Mark Zuckerberg will prevail and do well. Berkshire typically does well during the high inflation environment, and typically it's their forte. When the stock market drops big time, Warren Buffett has you under control. He will typically do well. And we got a few more, as you can see here. Look at the low valuation names here: UNH and J&J, and even JP Morgan, Walmart, Procter Gamble all work here. You could buy these into this big drop here. Look, all these names have been dropping in 5 day and even in 10 day, as you can see here. And we got a few more here. Home Depot also works. It's been down big time, as many of you know. You could buy some Home Depot and even Bank of America. Both of them will work here and go from there. Look, Alibaba is back. You could buy some Alibaba here. That's also a great one here. And you got Exxon Mobil. This one, I think you got to watch a little carefully here. It's been going up off late. Probably you could buy Chevron instead. Chevron will do very well. With that, we got a couple more names here. It's a continuation of the big cap names you could buy here. Look, we got Pfizer right now. PS ratio, price to sale is very low here, and it's been down for a while. You could buy some Pfizer; they will do well. Great grades from Morningstar, as you can see here. And I got ASML, a little bit high valuation, but I love this stock. I've been buying slowly into the downturn here. And as you see here, we got a few more steady Eddie names here. All of these work. Look, we got one of my favorites here, Chevron. You could buy some Chevron. Right now, a little bit higher RSI. It's been going higher. But when it comes down, you could buy. And Walt Disney is a good one too. You could buy some Disney. It's a recovery play. Right now, it's not doing great, but long term, it's a good one here. And one of my favorite stock here, AbbVie. You could buy some AbbVie. It's a great, healthcare name here. It's been down off late. You could buy some AbbVie into this weakness. They will do very well. And Eli Lilly, we talked about it. One of my favorite. You could buy some Nike. Thermo Fisher is a great one to buy. Look, it's a low valuation here, just 6. You could buy that one too. I love AVGO. It's also a good one. Or Broadcom is a good one here. You could buy some Broadcom also here. Oracle is very steady, Eddie. You could buy some. And we got Mark Benioff here. Abbott Lab, great one. And even Novo Nordic, it's a good one to buy here. So with that, these are some names you could buy here. And Verizon is also good, as you can see here. If you are a dividend investor, that's also a good one to buy. So with that, let's jump in here and we'll conclude. Thank you very much. Happy investing and trading. Market is violent. Be careful. Buy slowly, buy the dips, and don't buy a lot at one time. Thank you very much. Happy investing and trading.